Joining in to discuss that and lots more, we've got Viren Prasad Shetty. He's the Executive Vice Chairman at Narayana Health. Thank you so much for taking time out. A lot of consolidation that we see within the entire hospital space. I just want to understand how you're looking at the overall industry dynamics. Is that really changing now? Are we seeing brownfield expansion looking more attractive than greenfield?
No, I think this is a trend that's been playing out for quite a while. What's happened is there are a lot of people that have been invested in by private equity funds that are looking for exits. A lot of hospitals that were set up 5 to 10 years ago from promoters who were not in the healthcare business that are looking for exits, as well as the existing players wanting to consolidate their positions. And of course, it's always faster to acquire something nearby or to take over an existing project than to start from scratch. And given that there's so much demand for healthcare now, especially in a post-COVID era where people are a lot more sensitive about their healthcare needs, the faster you can ramp up beds, the better it is.
Viren, good morning. Nikunj also joining in. You acquired an asset 3 weeks ago. I understand that a lot of hospitals are looking at, large hospitals are looking at acquiring smaller hospitals. Are we at a fresh cusp of a greenfield and more like an inorganic strategy by hospitals? Because private equity guys, when they come in, they are more cost conscious. They like to sweat the balance sheet. But when a hospital is acquiring another hospital, for me, that is pure expansion.
I won't speak for everyone else. Now, different organizations will have different reasons for getting into expansion. So, for example, some hospital groups, if they're pre-IPO, they may want to bulk up just before they get listed. Some people that are just in the first phase of their private equity expansion will try to just add as many beds as they can. Those that are on the end of their fund life will try to, be conservative the way you said. But if I just speak for ourselves, the one acquisition that we made was adjacent to our flagship health city in Bangalore. It fulfilled a very key requirement for us, which is being able to add orthopedics and trauma to our portfolio. And given that our goal is to build one of the best hospitals in Bangalore that's providing all the services, it made sense for us to acquire it at a pretty steep price.
Where do you see, Viren, scope of greater, bang for the buck? Will it be in specialty hospital, or will it be in the traditional hospital, which are large and they pretty much cater to all range of preventive as well as surgical cures?
See, the answer is it depends. You see, because while single specialty hospital that are smaller, asset light, scale fast, you can get it cheaper. So theoretically, there's more bang for the buck, but it depends on who the seller is as well. If your seller is someone that's a lot more financially astute, if you're looking to acquire that, they will extract their pound of flesh. If the seller is not so financially astute, you may get a good deal on that. Plus, also, you look at the long-term outcomes for institutions that focus on just one specialty. Eventually, you are capped on the potential revenue growth rate. Because if you're just doing one thing or a collection of things around one specialty, there's not much more you can get into. Whereas if you get into multi-specialty, you are paying more upfront, you are investing in a lot more complexity, but you have a multi-decadal runway of growth because you can keep adding newer business lines, and you're a lot more resilient to your bottom feet getting cut out from under you from lower cost providers.
Shanay Shah also joins us, president with Shalby Hotels. Shanay, good morning to you as well. Shanay, I must say you're looking slightly different. I'm seeing you after a while. So new look?
Good morning. Good morning. Yes, it's just a new fresh pair of glasses.
It's just a coincidence that we got Vinay and Shanay both on the screen, and it is just a coincidence that they both are the next generation who are not doctors. Their fathers are doctors, and they both are managing the company administratively. So nice to see both of you together. Shanay, my question to you is that now there seems to be a definite interest in the hospitality sector, in the healthcare sector, I beg your pardon, not hospitality. Is this largely because of COVID and the realization has come in that there would be greater focus on healthcare, and since the spend has come back, everybody wants to expand quickly?
Yeah, I think, it is happening for a variety of reasons. I think, I think the next decade, I think the healthcare sector is expected to do very well, and which is why you see a lot of incoming private equity funds coming in. At the same time, a lot of hospitals are also looking at acquisitions at this point of time because, at least when I talk about Shalby, we are looking for acquisitions all the more so because, our ROCs are back at the 15 to 17% level. And we do feel that we have an appetite, to make some acquisitions. The reason being that, there are a few geographies which have been shortlisted by our management, which makes sense, and from the strategic fit, it does make sense for us to look at some of these acquisitions. Having said that, yes, over the last 5 years, there have been a lot of hospitals, especially we have been one of the youngest hospital groups because most of our hospitals are between the 3 to 5 year range. So, we did take some time to get these hospitals matured even before we look out for newer hospitals or acquisitions.
Shanay, hi there. Morning. I just want to understand a little more broader perspective as to why you think that we're seeing this kind of consolidation taking place now in the sector. Is it that smaller hospitals are finding it difficult to be viable on account of competition? Is there now just more increased interest from the PVs? Is there improved demand? Valuations looking a lot more attractive? What would you attribute it to?
See, I think there has been, a lot of deals happening recently, and a part of it is also because the smaller hospitals have not been doing too well. And at the same time, when they're offered a really good deal in terms of valuation, it becomes very attractive to kind of, make that transaction. So I feel it is largely because of that, and we do believe that of both is going to do well. The multi-specialty hospitals as well as single specialty hospitals. Like for example, for us, our new venture, which is the franchisee venture, is going to focus on single specialty, but it's going to be smaller hospitals. And the larger hospitals, the multi-specialty is going to be slightly on the larger scale, which is going to be between 200 to 300 beds for us. Having said that, if you're asking me whether the competition is likely to go up, the answer is maybe not, because at least in the towns where we are present, we don't see any new capacity coming up. It is largely that the existing capacity is being taken over, and which means that there is no increase in competition, I would say.
Wherein for the sector per se, and then for the company NH, how do you see the demand versus capacity moving for next 3 years?
For the sector, I would say that for certain large cities, Bangalore, Delhi, Bombay, Chennai, Hyderabad, you have this situation where there has been a lot of capacity that's been added, both in the organized, which is corporate hospitals, those that are listed companies, as well as from a lot of independent practitioners and a few private equity funded people. I would say that the pace of bed addition in large hospitals may slow down, or it will consolidate among fewer players. But in small towns, tier 2, tier 3, tier 4 towns, at least I've seen a lot of new capacity come online during the pandemic, after the pandemic, and will continue, because that's just the demographic reality. More and more people are going to be moving into smaller towns, and their requirements will go up as their socioeconomic status improves. They're more likely to spend on healthcare and prioritize that as one of their spending buckets. So the capacity will naturally follow that. Now, as for what is our priority, it is our existing network. So our flagships in Bangalore and Calcutta will get the highest amount of priority. The hospital that we run in Bombay, Delhi, Mysore, Shimoga, Raipur, the second level of priority. So we need to expand all around. We have to improve infrastructure. We need to add more ICUs, add more linear accelerators, add more beds, add more canteens, outpatient areas. There's just a lot that we have to do within our existing network to strengthen and increase the footfalls, increase the throughput, increase the per bed utilization, which should keep us busy for the next 5 years.
That's the other thing, Viren, that I wanted to understand, because as I understand, you recently signed an agreement with Shiva and Shiva Orthopedic Hospital. You're looking at acquiring 100 beds there. There's a trauma hospital in Bangalore as well. Tell me a little bit more about your own acquisition pipeline and compare that with the organic growth that you may have outlined as well.
The acquisition that we did, the one that was in Bangalore, the trauma hospital, was right adjacent to our existing hospital. So it was sort of an organic expansion that just happened very quickly. We are expanding over and above that. We are adding about 500 beds to the Bangalore Health City. We look to add more capacity in Calcutta. Now in Calcutta, there are 2 acquisition targets, but those have been taking a very long time to fructify. So in the meantime, we will look at expanding the existing capacity and looking for other places to grow. Whereas for the other hospital that we have, there is existing space in the campuses where we can add about 100, 150 beds all over in a more gradual manner. Acquisitions, which is going into new towns, new parts of the city, is essentially like building up a brand new P&L head. And that follows the same dynamics as any new hospital, which is 2 to 3 year break even and a long time for you to get a return on that capital, whereas those that are a lot closer can break even much faster and provide a much greater return.
Shanay, for Shalby hospitals, medical tourism has been a very large differentiating factor. Given how the inflation dynamics are moving globally and how healthcare cost post-COVID, at least in developed economies and in Middle East and in Africa, has gone higher, do you see that really could be the next big revenue or the next new scalability which could really be the differentiating factor?
Nikunj, is that for me?
That's right.
Okay. Yeah, I think for us, medical tourism, so, from in this part of the world, especially Ahmedabad and the western part of India, we have been the pioneers in terms of, the kind of things we've done from the last 2 decades, I would say. And we operate a clinic out of Nairobi since the last 15 years now. So we do believe that, the domestic growth has been between 12 to 15%, but we do believe that, the medical tourism industry in India will be growing at 15 to 20% over the next 5 years, CAGR. So I think that is a great opportunity for, the Indian hospital operators to leverage on. And Shalby is doing its part in terms of trying to capitalize on that. And yes, Africa and Middle East will be the 2 largest, segments in terms of, how they would play out for the next 3 to 5 years, I would say.
Okay, Shanay, Viren, both of you, thank you so much for taking the time out and speaking with us today.
Thank you.